Good morning and welcome to GrainTV. My name is Cody. This is Brock. Shimano. Today is May 9th. The markets are open right now. Corn's trading down 7 in Chicago. Beans down 12 and a quarter after trading down as much as 22 this morning. So a serious break in beans, especially after yesterday's move. Wheat right now trading down 8.5 in Chicago, and Kansas City trading down 8. Wheat right now is approaching that $6, that key support level is right now trading at 6.06 and a quarter, so watch that today. Brock, tomorrow we have a huge USDA report. What is the trade focusing on? What can we base our trades on?
Yeah, basically what the trade is going to be focusing on is the ending stocks estimates. What you can see here by this table is that the average guess for corn ending stocks is going to be revised lower by 40 million bushels to 761 million bushels. Soybeans also looking to be revised lower by 35 million bushels down to 215 million bushels. And wheat is looking to be moved down by just a mere 12 million bushels for this year's ending stocks. The big number that the trade is going to be focusing on is next year's ending stocks, the 12-13 ending stocks. So the first time the USDA is releasing their estimates for 12-13 ending stocks. And take a look at corn, a whopping 1.686 billion bushels looking to be left over from this year's crop. Soybeans, a mere 172 million bushels, and wheat looking at 827 million bushels. So the big number here that's going to concern the trade is the corn ending stocks for 12-13. I think there's a couple reasons why we're going to see revisions lower for this year's ending stocks. One reason is export sales have been running ahead of pace, and also South American production.
Yeah, I think export sales is an area that we're most likely going to see a revision, particularly in soybeans. Right now, soybeans we're running about 30 million bushels ahead of pace from where we need to be at this time to meet USDA expectations, and for corn we're about 20 million bushels. But for beans, I think beans has more of a case to be revised higher. Right now, there's two reasons. One, sales. We have seen a very great, really outstanding sales for soybeans, and the other is South American production, like you said. Right now, the Buenos Aires Grain Exchange is pegging Argentina soybean production at 41 million metric tons. We're also seeing Oil World post their Argentina soybean production forecast at 41 million metric tons, and compared to the USDA, where it stands from the April report, they're sitting at 45. So there's definite room for USDA to revise that Argentina forecast lower. In Brazil, you can also see it possibly be revised lower, but just not as much room right now. I think Solaris is coming in at 64.95 million metric tons in Brazil compared to the USDA's 66 from the April report. So there's only about 1 million metric tons that it could be revised lower, I think, if you use Solaris as your proxy. In corn, it's just different. I think we're going to see a wash. I think they're going to kind of cancel each other out. In Brazil on Monday, Solaris revised their production estimates for Brazil from 60.7 million metric tons up to 65. And so it looks like the corn production is coming in a little better than expected in Brazil. However, Argentina, we see the Buenos Aires Grain Exchange pegging their production at 19.8 versus the USDA's number of 22. So the bottom line is we could see revisions higher for Brazil corn production. We could see revisions lower for Argentina. I think it's going to be most likely a wash. So really focus on soybeans. That's where the action is going to be if we see export sales revisions.
All right, a lot of information to digest tomorrow. We're going to take a quick commercial break, and we're going to come back, and we're going to take a look at the markets trading live in Chicago. We're also going to talk about the dollar index.
GrainHedge is more than just futures trading. Clients receive our cash grain optimizer showing spot and forward bids within 200 miles of your farm. We take into account your trucking costs to find your best-selling opportunity. We provide in-depth basis mapping, historical basis and cash price charting. Every day we show you your best price and if it meets your profit goals. Contact GrainHedge today to get started.
Welcome back to GrainTV. The markets are open in Chicago, so let's turn over to Fire Tip for the live quotes. We continue to see selling in the early going this morning. Corn on old crop is down 9 cents. Soybeans down 14.5 on the old crop. Wheat down 8.5, and Kansas City down 10 cents this morning. A couple numbers I'd like to focus on the board this morning. The dollar index up nearly another 0.5% over 80, and soybeans on old crop is down another 14.5 cents.
Yeah, if you take a look at the daily chart for the dollar index, you can see that we are rallying here. But one thing I want to focus in on is the way that we reacted yesterday. So we had the news about the French elections, we had news about the Greek elections, and we traded higher, sharply higher, we gapped higher. and then we started selling off. What happened is we filled that gap. And typically what we see is support levels basically once that gap has been completed and completely filled. What we saw here is the market trade down. It filled its gap at 79.60 and then we moved higher. So that doesn't always happen for gaps, but typically we do see support where we left from the night before. Now if you look at soybeans too, I just want to focus in on that because that's really where all the action's happening. If you look at this, I drew two trend lines. One has a smaller slope and one has a more aggressive slope here. You'll notice that the more aggressive slope, if we zoom in here, kind of corresponds also with the 20-day moving average. As soon as we traded down through that and really broke that support level, we came off pretty hard. We lost 50 cents. That was pretty aggressive selling. I think what is happening here is that stop limits have been triggered. We're seeing some trend following money exit, and but we could see some support here at 14. We have seen a little bit of buying here this morning. If you look in on the 15-minute chart for the July soybean contract, you can see we traded down pretty sharply this morning, and then we've experienced some buying. So there's a good chance that was technical yesterday. It was a little bit technical this morning. We may see some people buying in, trying to prepare themselves for this USDA report.
USDA report is released tomorrow morning. Make sure you tune into GrainTV to get a breakdown of that report. Follow us on Twitter, @GrainTV is where you can find us. Check us out on Facebook or get a hold of us at 877-472-4607. Have a good rest of your day.